The Dukascopy TV team once again brings you the week ahead, where we invite a guest to talk to us about several key data releases or events that could shake the markets from the week beginning Monday the 1st of October. Today is the first day of the trading week. Richard Campbell, Head of Trading at Sharpe Signa, joins me on the phone to discuss the Reserve Bank of Australia decision on Tuesday the 2nd of October, Bank of England rate decision on Thursday the 4th of October, and USD change in non-farm payrolls and US unemployment rate figures expected on Friday the 5th of October. Hello Richard. Richard, what do you think investors and market players should be keeping a close eye on this week?
Well, we've got Bernanke speaking later on today in about 3 hours' time, I think it is. And that'd be quite interesting to see what he's got to say following the criticism he received last week from Charles Pfizer, President of the Federal Reserve of Philadelphia. You'd be expecting Bernanke to be out to defend, the current Fed policy after, the criticism he got last week. The rest of the week's dominated by a mixture of international business surveys and central bank meetings. The RBA rate decision tomorrow, Eurozone PMI. Wednesday we have Eurozone retail sales, and then busy 2 days, Thursday, Friday. Bank of England asset purchase target and the UK rate decision, followed by the ECB rate decision, Draghi's press conference, which is always volatile time for the markets whenever he's speaking, and then we have the release of September's FOMC later that afternoon, and then the big one on Friday, starting off with the Bank of Japan rate decision, Canadian unemployment, and finally the non-farm payrolls and the US unemployment rates. I guess on top of all this data coming out, the market will be sitting there waiting for comments and news from Spain regarding the expected request for aid. Any signs when that will happen? I think most people are expecting sometime by the end of the month. So we'll see what happens there.
And what do you think we can expect from the Reserve Bank of Australia decision on Tuesday?
I think it's quite a tough call for tomorrow. It seems like the market favours a 25 basis point cut, and this seems priced in. But most economists favour unchanged. It does seem just a matter of, is it this month, is it next month? If it remains unchanged, which at 3.5%, which I think it will, the attention will just switch to next month, and everyone will just expect the cut to take place then. But following the release of the September's minutes from the central bank meeting and how dovish they were, the market wouldn't be that surprised if it did happen tomorrow. I do think that whatever the outcome, although you will see some volatility probably instantly, and for the next few hours, 6 hours, maybe 24 hours, I think in general it won't be too bad. People know the rate cut is coming, and it's just a matter of whether it's tomorrow or the following month.
On Thursday, do you think we can expect the key interest rate coming from the Bank of England to have increased or decreased?
I don't know. I don't think there will be a movement this time round. The main reason why I don't think there will be is I think the NPC will decide to wait for the next meeting. Then they will have a serious review of the policy. By the time of the next meeting, they will have completed the current QE program, and the latest inflation report forecast will be available. So they will have a much clearer indication and picture of the current state of the economy. I do think after three consecutive quarters of negative growth, I can see some sort of sterling strength towards year end, especially against the euro in the current situation now. The second quarter revision was nowhere near as bad as people feared. Keep an eye out on the UK PMI tomorrow for any signs there. but I think that the worst is over for the UK, and the data in the coming months will show some slow signs, but gradual signs of improvement that the worst is over.
USD change and non-farm payrolls and the US unemployment rate figures are expected on Friday. What can we expect?
I think the numbers are going to be fairly similar to last month. I'm expecting the non-farm number to be slightly higher, maybe 110 or 120, as you say, from 96 last month. The unemployment rate probably up to 8.2 from 8.1. I think that the days of these numbers completely shocking the market are in general behind us, and the ranges that people give nowadays are getting narrower and narrower, and it's not often you get a big shock on a non-farm day. I do think that following the recent FOMC and the QE decision, and the fact that further measures are unlikely, weak data from now on will be seen as risk negative rather than how it has been for the last few months, dollar negative. I think the greenback will benefit as a safe haven with weak data, just like it did on Friday with the poor Chicago PMI data came out. Keep an eye. If the numbers do come out on Friday somewhat out of line from market expectations, I think you need to bear that in mind. That although the initial reaction might be to trade it as a dollar trade, I think the market is more risk dominated rather than dollar dominated for the time being.
Thank you for joining me today, Richard. Well, that's all we've got time for right now, but stay tuned to Dukascopy TV for more updates and interviews. For now though, goodbye.